Simple, liquid plan, high-yield savings. Why this works first. You need money your family can reach quickly without underwriting, claim reviews, or waiting periods. A dedicated high-yield savings account labeled Funeral Fund gives you control, principal safety, and predictable growth. The account is boring on purpose. That's the point. Funds are there when needed, regardless of market dips, and you decide the monthly transfer, so it fits your budget now and later. What to set up? Open a separate high-yield savings account at a bank or credit union you trust. Give it a clear nickname like Funeral Fund so you never mix it with your spending money. Add a payable on death beneficiary. Banks and mainstream sources explain that POD lets your beneficiary access funds directly after you pass, with ID and a death certificate, bypassing probate. Ask the bank for the beneficiary form while you're opening the account, or add it in online banking if they allow. How to automate it? Pick a number that doesn't pinch $25, $50, or $100 a month, and set an automatic transfer from your checking on the same day you receive income. Consistency beats intensity. Increase contributions when you get a cost of living bump or when another bill ends. If you're nervous about starting, commit to 3 months. At a small amount, momentum makes this easy. Setting the right target. Don't guess. Call 2 local funeral homes and request the general price list. For now, use a provisional target. Direct cremation, cremation with a service, basic burial, or traditional burial with viewing. National medians suggest direct cremation around $1,700 to $2,200, cremation with a service around $6,280, and traditional burial around $8,300. We'll tighten this with your local quotes. Then you'll update your goal in the account notes. Access rules your kids will thank you for. Add 1 primary POD beneficiary, and if your bank allows, a contingent beneficiary. Tell both where the account is and what it's for. Write a 1-page final wishes note with the provider you prefer, service type, budget, and who to call first. Put a paper copy with your other documents and an electronic copy in a shared folder. Access plus clarity removes guesswork. Common mistakes to avoid. No POD designation. If you skip it, funds may get stuck in probate. Fix this today with the bank's form. Mixing funds. Keep this account separate so you never borrow from it. If you need emergency money, build a separate emergency fund. Chasing teaser rates. Some banks offer a high APY that drops in a few months. A solid, consistent rate is better than hopping banks and forgetting your POD. Ignoring local costs. Overfunding ties up cash you might need. Underfunding forces last-minute debt. Confirm costs and set a realistic target. How to verify POD is active. After you submit the form, ask for confirmation in writing, an updated account profile, or a letter that lists the beneficiary. Some banks even show beneficiaries in online banking. If they don't, save a photo or PDF of the signed form. Share a copy with your executor or the 2 people who will handle your affairs. A quick example. Let's say you set $50 per month. In year 1, you'll have $600 plus interest. In 5 years, you're at $3,000 plus, and if rates stay decent, it grows quietly in the background. Pair that with a small term policy for a limited window, and you've covered the full target from day 1 while your cash balance climbs. When your fund hits the number you want, you can reduce or drop term. That's leverage without locking yourself into rising premiums. The thing most people miss is immediate usability. Claims can take time, especially inside a contestability period or if documents are incomplete. A POD savings account can be accessed as soon as the bank sees the death certificate and proper ID. That speed reduces stress for your family during the busiest week they'll face. What to do if you already have some savings? Don't move everything. Transfer the amount you want earmarked for final costs into the funeral fund. Then add the pod. Labeling matters. Your kids won't have to guess which dollars they're allowed to use. If you're concerned about bank insurance limits, stay within FDIC or NCUA caps per depositor per bank, or diversify across institutions. Simple checklist you can finish today. Open a dedicated high-yield savings account named Funeral Fund. Add a pod beneficiary, and, if possible, a contingent. Set an automatic monthly transfer for an amount that fits. Write a one-page final wishes note and store it with copies of your account confirmation. Tell 2 family members where the folder is and who to call first. Now, you might be thinking, what if I pass before the fund reaches the full amount? That's where layering comes in. In the next pillar, we'll cover a small level term policy to bridge the gap while your fund grows. But even if you skip term, having a few thousand ready beats forcing your kids to float everything on a credit card. If you remember nothing else about Pillar 2, remember this: control, clarity, and quick access. You're not asking permission, you're not hoping a claim clears in time, and you're not gambling on premiums that rise with your age. You're building a straightforward solution your family can use within hours. Cost reality check. What funerals actually cost, regional ranges. Now let's nail the target before you shop for any financial product. You don't need guesses, you need your local costs. National medians from industry sources put a funeral with viewing and burial around $8,300 and a funeral with cremation around $6,280. But prices swing a lot by region, provider, and what's included. Your job is to find your local number and write it down. Here's why this matters. If you overestimate, you tie up cash you could use. If you underestimate, your kids pull out a credit card the week of the service. Getting the number right lets you size your funeral fund and any term policy with confidence, and it keeps you from buying fluff you never wanted. What to compare? Fast and fair. There are 4 common tiers. Direct cremation, no ceremony, minimal services, typically $1,700 to $2,200. Cremation with a service, ceremony plus cremation, $5,500 to $7,000. Basic burial, graveside, or simple service with burial, $6,000 to $8,000. And traditional funeral with viewing and burial, fully staffed, $8,000 to $12,000 plus. Call 2 local funeral homes and ask for the general price list. They're required to provide it upon request. Say, I'm planning ahead. Please email me your general price list and any package descriptions. You'll see line items for basic services, removal/transport, preparation, use of facilities, vehicles, merchandise like caskets or urns, and cash advances such as death certificates or clergy honoraria. Now, the thing most people miss: packages versus line items. Packages can look cheaper, but they sometimes bundle services you don't want and hide markups in the merchandise. Ask for both the package price and the itemized equivalent. If the line item total is lower without something you don't need, you just saved money without losing quality. Casket and urn markups are a classic trap. Funeral homes can mark up merchandise, sometimes substantially. You're allowed to provide your own casket or urn from another vendor. If you like a package but not the casket price, ask how the package adjusts if you bring your own. If the answer is a vague, we'll work with you. Press for the exact dollar change. Set your target with a simple rule. Pick your preferred option, then add a buffer of 10 to 15% for cash advances and small variables. If your traditional burial quote comes back around $8,300, set your funeral fund target at $9,000 to $9,500. If you're aiming for direct cremation and you see pricing around $1,900 in your area, set the target around $2,100 to $2,300. You're not trying to be perfect, you're giving your family breathing room. Your quick win today: make 2 calls, request 2 price lists, and choose your preferred option. Write your target number on your final wishes note and in your funeral fund account memo. Once you see your local reality, every financial decision after this becomes simple. The smart, low-cost bridge, term life. Now, let's talk about leverage. If you're reasonably healthy, level term life can cover the full target today for surprisingly little while your funeral fund grows in the background. The reason it's a smart bridge is simple. You get more coverage per dollar for a fixed period. Then you shut it off when you don't need it. No forever premiums, no sneaky age steps during the term, and no lapse risk from rising costs, if you buy the right kind. Why this matters? The danger window is the next 10 to 20 years for most people, exactly when you want the certainty that your kids won't face a bill if you pass tomorrow. Term is built for that window. You can size it to your local funeral cost, plus a buffer for cash advances, travel, or a small debt. If your town's traditional burial runs around $8,300 to $9,000, a $15,000 to $25,000 term policy is often plenty. If you prefer a simpler cremation with a service, $10,000 to $15,000 may do the job. What to shop for? The two phrases you need are fixed pricing and fixed death benefit for the entire term. That means the price you pay is locked for, say, 10 or 15 years, and the payout doesn't shrink. You want a policy that's truly level, not annually renewable term, that reprices each year. You also want the term length to match your bridge plan. If you think you'll fully fund your funeral fund in 10 years, buy a 10-year level term. If you want more cushion, choose 15. How to compare carriers. Get at least 3 quotes from reputable companies, ideally through an independent broker who can shop the market. Ask each one to send you an outline of coverage that states fixed pricing and fixed death benefit and shows the term length in plain English. If someone pitches a no-exam policy, that can be fine, but verify whether the benefit is immediate or graded and confirm that the premium is locked for the full term. A quick health questionnaire or a brief exam can drop your price a lot if you're generally healthy. Underwriting and health. Basic underwriting works in your favor if you have manageable conditions and see a doctor. No exam options exist, but they often charge more for the convenience, so you're trading speed for cost. If your health is a hurdle, that's okay. Remember, your funeral fund and pre-need options don't rely on strict underwriting. Term is the if healthy, get more for less tool. Right-sizing the amount. Start with your target from the price lists you gathered. Add a 10 to 20% buffer for cash advances and small surprises. If your local cremation with a service comes to about $6,280, a $10,000 term can cover that with room to spare. If your regional burial lands near $8,300 and you want to add travel help for out-of-town family, choose $15,000 or $20,000. You're not trying to replace income. You're covering a single predictable expense with a little breathing room. Common mistakes to avoid. Buying a term that's too long. A 30-year term costs more and outlasts the need. Stick to the years you actually care about. Buying a term that's too short. If you know you won't hit your savings target in 5 years, don't buy a 5-year term. Go 10 or 15, so you don't face a reprice. Missing the payment method detail. Set up autopay. A missed payment can cause a lapse. Keep a backup funding source on file. Assuming no exam equals no waiting period. Some simplified policies still have graded periods. Read the page that states benefit is level and immediate. How to implement this cleanly. Step 1, use your target to select the coverage amount. Step 2, decide the term that matches the time you'll need the bridge. Step 3, collect 3 quotes. Step 4, request written confirmation of fixed pricing/fixed benefit and the policy form number. Step 5, if you're approved, put the policy in your safeguard stack and tell 2 family members where it is. Step 6. Set a calendar reminder 60 days before the term ends, and another reminder 2 years before the term end to review your funeral fund balance and decide if you'll reduce or drop coverage early. A quick example to make it real. You set a $15,000 term for 10 years and pay a modest monthly premium that fits your budget. Your funeral fund auto-transfers $50 a month. In 5 years, you've banked a few thousand, and in 10 years, you're close to or at your target. You cancel the term with zero penalty and keep your cash. You used the policy like scaffolding, helpful while you built, unnecessary once the structure stands. If you remember nothing else about term, it's a tool, not a forever commitment. Size it to the job, lock the price and payout for the full term in writing, and drop it once your savings cover the goal. That's how you get maximum protection per dollar without paying for decades. The agent's least favorite question. Here's the question that makes agents squirm. Is this premium fixed for the entire term? Guaranteed. And is the death benefit fixed? An immediate yes or no? Please show me the exact page. Then hit the follow-up, what's the conversion option and deadline? Point me to the policy page. If they hand wave, you haven't got clarity. Push one more time. Are there any renewal jumps at the end of the term? And if so, what's the exact renewal premium in year 11 or 16? Seeing that number in writing keeps you from getting trapped by a surprise reprice later. Ask about riders in plain English. Is accidental death extra? Is there a waiting period? Any exclusions I should know now? You're not being difficult, you're being precise. Most agents will dodge this question. They'll say it's complicated, or let me get back to you. If they do, you've got your answer. The policy isn't truly locked. And that's your signal to move to Pillar 4. The payoff is next. We'll move to Pillar 3, where we fix price creep where it starts at the funeral home by locking in itemized costs directly. This is the step many agents never mention, and it can save you thousands when done right. The direct, guaranteed price lock, pre-need funeral plans. This is how you stop price creep at the source. A pre-need plan is an agreement with a funeral home that itemizes services and merchandise and, when guaranteed, locks those specific line items at today's prices. Unlike insurance that pays cash later, this contracts the goods and services you choose now. Many plans are funded by a trust or an insurance policy behind the scenes, but your focus is the contract, what's guaranteed, what's not, and how portable it is if you move. Why this matters? Inflation doesn't stop for caskets, vehicles, or staff time. A guaranteed, itemized pre-need plan means the funeral home absorbs those future price increases for the covered items. That reduces guesswork and protects your family from upsells under stress. The benefit your kids feel isn't just money, it's confidence that they're doing exactly what you wanted at the price you agreed. What to set up? Ask 2 funeral homes for. 1, their general price list. 2, their pre-need contract with. Guaranteed items clearly marked. 3, written rules on portability and refunds. And 4, a list of non-guaranteed cash advances like death certificates, obituaries, or clergy honoraria. You want a document that shows each service, each piece of merchandise, and a guaranteed check mark where applicable. If a provider won't itemize, that's your signal to keep shopping. You're right, I apologize. The response got cut off. Let me continue from where it stopped. How funding works in plain English. You'll either pay a lump sum or installments. The funeral home typically places the money into a regulated trust or an insurance-funded pre-need policy. You don't have to manage that part. Your job is verifying that your contract states the guarantee on services and merchandise you selected. Payments stop when the plan is paid. If you choose installments, confirm what happens if you die before completion. Many plans are designed so the insurance component covers the shortfall, but get that clause in writing. Portability and relocation. Life happens. Ask, if I move, can this plan be transferred to another funeral home? Is there a fee? Does the guarantee travel or convert to a dollar credit? Some large providers advertise relocation protection and flexibility. Independent homes may offer transfer options too. Read the exact portability language so your kids aren't stuck or penalized later. Refund rules and flexibility. Request the refund policy in dollars, not vague phrases. Ask, if I cancel in 2 years, how much do I get back and how quickly? Also ask, can I change items later without losing guarantees on the rest? The best contracts let you adjust within reason and keep guarantees on the unchanged line items. The big gotchas to avoid: vague packages with no itemized guarantees. If it isn't itemized, it isn't controlled. Non-guaranteed merchandise hidden in fine print. If the casket or urn isn't guaranteed, price inflation can erase the point of prepaying. No portability or unclear transfer terms. Moving shouldn't blow up your plan. Cash advances treated like guaranteed items. They usually aren't. Budget a small savings buffer for these. Verification script you can use tomorrow. Please show me an itemized pre-need contract where guaranteed services and merchandise are clearly labeled. Confirm in writing which items are guaranteed, which are not, how portability works if I move, and your exact refund schedule. Also confirm how the plan is funded, trust or insurance, and whether my selections are guaranteed regardless of future price increases. Ask for PDFs and highlight the guarantee language. What's guaranteed versus not? Typically guaranteed. Basic services of the funeral director and staff, use of facilities, removal/transport within stated miles, preparation, and specific merchandise you select now. Typically not guaranteed. Third-party cash advances like certified copies, obituary fees, flowers, and clergy. That's why I like stacking a small savings buffer alongside the plan for those variables. Real-world flow. When death occurs, your family calls the funeral home listed on your final wishes note. The provider pulls your pre-need file, delivers the guaranteed services and merchandise at no additional cost for those items, and bills only the non-guaranteed cash advances. If the plan is portable and you've moved, they transfer or apply the credit per contract. That single call avoids shopping during grief and blocks surprise price jumps on the core costs. Common mistakes and fixes: buying everything up front, just in case. Only lock what you know you want. Keep flexibility for ceremony details. Not telling your family. Put the contract in your safeguard stack and give 2 people the provider's name and your contract number. Assuming guaranteed means everything. It rarely does. Highlight guaranteed lines on your copy and note non-guaranteed items with a dollar cushion. Quick when you can finish this week. Request 2 itemized guaranteed pre-need proposals in writing. Circle guaranteed items and cross-check against your wishes. Confirm portability and refund rules in the contract, not a brochure. Add the provider's contact to your final wishes note and share it. One more nuance. Pre-need locks prices, but funds sitting with a provider don't earn you market returns. That's not good or bad. It's a trade for price certainty and simplicity. If you value control and access, keep more in savings and lock fewer items. If you value certainty and want your kids to make one call, lock the core services and merchandise you care about most, choose the mix that fits your budget and your peace of mind. Safeguard Stack, paperwork that makes it easy for your kids. Now that you've picked your tools, let's make them usable.